When people think about taxes in the context of divorce, one of the things they think about is what happens when I transfer assets from my name to my spouse's name as part of the divorce. And the answer, generally speaking, is the tax code contemplates divorce and has set up mechanisms to allow this property to transfer without kicking off things like major tax bills or tax penalties. So, for an example, say I am getting divorced and I have a large 401k, and part of my 401k is going to my spouse. Well, you know that if you take early withdrawal from your 401k under normal circumstances, you're going to pay taxes and you're probably going to pay some penalties. That's not the case if you have a court order that part of your divorce is transferring assets. In other words, generally speaking, as long as you work with experienced and knowledgeable divorce counsel and probably get your CPA involved in some pieces of this, there's a way to move money associated with a divorce where if you dot your I's and you cross your T's, you won't trigger tax penalties or tax payments associated with moving things in order to effectuate the court's divorce decree. There's a lot of confusion out there around how alimony is taxed or not taxed. And that is a very understandable confusion because recently the rules changed. It used to be that if I paid alimony to my former spouse, I got a tax deduction and my former spouse paid income tax on that alimony. That used to be how it worked. It's still how it works if you have a divorce from back when that was the general default rule. However, if you're divorcing now, the taxation of alimony has changed. So now, if I were to get divorced now and I were paying alimony to my spouse, I would pay income tax on the money I earned that I'm using to pay alimony, and my spouse wouldn't pay income tax again. So however I got that money, I might be taxed on it, but when I pay it, I don't get a deduction. And when my spouse receives it, they don't pay income tax on it. This is generally called tax neutral. Alimony has shifted to being tax neutral at this point. So, since the tax treatment of alimony has changed in the last few years, what happens if you had a divorce decree under the old rules and you now seek to modify it going forward? Well, in that case, you actually have some options on how alimony will be treated. So it really depends if you have an older order and you're making a change to it, what the taxation will look like going forward based upon what you agree or what the court orders. When it comes to tax and divorce, one of the things that tends to happen towards the end of the year is we get strategic with our clients on whether or not we should file their divorce before the end of the year or after the end of the year. The reason for this is that your tax status for the entire year is dictated by what your tax status was on the last day of the year, on December 31st of whatever year. So what that means is if we're getting close to finalizing your divorce in like the fourth quarter of the year, one of the things we're going to think about is having you talk to your CPA or accountant to figure out whether or not it's more tax advantageous for you to be married or single or head of household or all the other various permutations at the end of the year. In many cases, it winds up making more tax sense to stay married on December 31st. And if that's the case for a particular client, one of the things we might do is give them that counsel and help them to decide whether or not they're comfortable holding off until next year to get the tax advantage, or if there's some reason it makes sense to go ahead and finalize the divorce within the existing tax year, that's fine. It's just important that they know the tax implications of falling on either side of December 31st so that they can weigh the pros and cons for themselves. Financial considerations in divorce can be very significant. And one subset of financial considerations that's also important is how the whole thing will be taxed. One of the reasons it's critical to work with a legal team that is able to do a deep dive on the financials and can speak with your CPA in an intelligent way that will assist you in making decisions is that this stuff really matters. It can make a big impact on how things come out at the end. If you're interested in the tax implications of a potential divorce in your situation, please give us a call.